At the end of this video, you are going to have a solid win rate and a decent risk to reward, all because of time frame alignment. This exact daily and 15-minute time frame concept I'm going to be showing to you today has helped me have a lot of decent entries, just like the ones you are going to be seeing on your screen now. And I've also used it to pass multiple prop-firm. And on today's video, I'm going to be giving you that cheat code for free. So stay with me as I walk you through the concept step by step. Okay, so to avoid unnecessary losses, the first thing we want to do in the market while coming to the charts is understand the flow of the market, understand the structure in which the market is flowing to. So I'm going to give us a little basis on structure here. When they talk about flow and structure of the market, we are talking about how the market presents itself. So the market could be trending or the market could be ranging. These are the two things the market would be doing at any given point in time. And if the market is trending, it means the market is trending to the upside or the market is trending to the downside. For a trending market, we see series of higher highs and higher lows, just like this. The market will create higher highs, higher lows, higher highs, higher lows, higher highs, just like this, and it's going to be trending to the upside. And if the market is on a downtrend, it's going to be creating series of lower lows, lower highs, lower lows, lower highs, just like this, and it's going to be trending to the downside. Now you want to make sure this is very clear and understandable. So this here is an uptrending flow of the market, and this here is a downtrending flow of the market. So the other thing that the market could be doing at that given point in time is that the market could actually be ranging when it's not giving you an exact direction of where it's actually heading to. It could be ranging here. So you want to understand. Now we're going to be dealing more with a trending market. So to understand what the market is doing here. So when we have a trending market, when we have a current trending market, we pay attention to flowing with that current trend in which we have. Yeah. So let's say we have a trending market and you come to the chart on the higher time frame. Now you want to make sure you are marking out your entire bias on the daily time frame or the higher time frame, so you have a better understanding of where the market is going to overall. So let's say we have a trending market here on the daily time frame, creating series of highs and lows, highs and lows, highs and lows. One thing you should understand is that after every expansion in the market here, the market is likely going to give us a correction back to a point of interest, and that point of interest could be our breaker block or the other block before it continue moving in the initial direction in which it's going. So when we have an expansion, what is expected of the market is a retracement. Now you can actually trade the expansion and you can actually trade the retracement. So let's say we have this on the daily time frame where the market gives us series of highs, lows, highs, lows. Now we now understand that it's now on an uptrend, and we now have another expansion. Now from that expansion, after we had an expansion here, we have a point of interest at this zone here. We can actually trade from this point. We can trade the expansion down all the way to a point of interest here, and we can also trade the correctional move, and we can also trade the expansion, in which we can sell this market from this point here to this point here, and we can also buy this market from this point here to this point here. But you just want to be able to understand how to align with exactly what the market is doing, so that you'll be able to understand the particular flow in which the market is going, and you'll be able to just flow with it. So let's say you mark out this chart on a daily time frame, and you already understand the bias of where the market is going. You already understand that, okay, this is a point of interest where the market is likely coming to retrace to here. You already mark out all of your zone like this. Now from this zone in which we have here, from this low that we have here to this high that we have here, you are going to see a structural base on the 15 minutes. So if you head over to after marking this on the 4 hour, if you head over to the 15 minute here, this particular move that we have from this point to this point is going to create series of high, low, high, low, high, low, high, low, high, low, and you're just going to keep doing this thing here. and this would be the expansion. Now this expansion here is the same as this single expansion that we have here. So for you to now trade this retracement, understanding that okay, you are now expecting a retracement all the way to this point of interest, for you to now trade this retracement, for you to know when this retracement is, when you want to trade the retracement here, you want to see a shift in market structure at this point. And that shift in market structure could be something like this. When we have now a shift in market structure, you now understand that the price at this current point in time have shifted from an uptrend to a downtrend. Now this is when you now want to trade that retracement. You now want to trade that retracement, and you want to trade that retracement now all the way to a point of interest in which we have. You want to trade that retracement all the way to a point of interest in which we have. So it could be something like this. Now on the 15 minutes, you get your entry and you just trade the retracement all the way to this point of interest. Now once the price gets to a point of interest, it is not a guarantee that the price will hold from this point here. This is just a point of interest that you are watching out to take a trade if opportunity present itself. So from this point of interest in which we have here, there are two things that will likely happen. At this point of interest here, on the lower time frame, which is on the 15 minutes, the market structure could shift from this point and it will start selling, and it will start buying from this point. If we have a market structure shift from this point and it start buying, now it's telling you that the market would continue going in the initial direction, and it's heading, and it will go and clear out this initial high in which we have here. And we'll go and clear out that initial high in which we have here to continue the flow, market structural flow. Now another thing that will happen is that now you don't take trade from this point of interest unless you have that additional confirmation, because if the confirmation did not present itself, the market might likely do something like this where it just fails to hold. And so that's why that confirmation is very needed. Once it tap here, if this zone will not hold, the market will just bounce from there. It will definitely give you a reaction. It will bounce from there and will continue selling back down. It means that zone didn't hold. So you want to make sure once you mark out your point of interest on a higher time frame, you go to the lower time frame. On that point of interest that you mark out, you want to wait at that zone for a confirmational entry, and a confirmational entry would be a change in market structure, a switch in market structure, so that you'll be able to take a trade. Now if you have a switch in market structure from this point here, this is where you trade a reversal. On the lower time frame, which is on the 15 minutes here, whatever will be happening here would be a correction, and this correction will be on a downtrend. So you'll be able to see that we'll have series of lows and highs, lows and highs, lows and highs. Now once it taps to the point of interest on the higher time frame, once we tap on that point of interest on the higher time frame, just like this here, and the price starts to react from there, now you want to wait for your entry criteria, which is the market structure shift, inducement, point of interest, then you take your trade. Now what you just did there was that you trade a reversal. You trade a reversal setup at this point. Once you trade a reversal setup at the point of interest, any other thing you are going to be trading, you are going to be trading continuation up until you take out this particular high here. So that's why the reversal trade or the reversal setup comes only few times, but the continuation setups you see it a much more time in this particular leg. Let me give you a scenario of what I mean by reversal and continuation. There's a point where price will react from and give you reversal. So let's say let me give a basic of market structure. Let's say we have a trend like this: higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and the structure is just trending to the upside. Now this structure will continue heading to the upside until it gets to a point, and that point would be a point of interest. The price mostly reacts from point of interest, so we give you this correctional or reversal patterns from a point of interest. Once it tap into a point of interest here, that is when you will be able to likely see a reversal pattern. then you take your trade from there and you keep going. You will keep going. Now after the reversal pattern from that point of interest, any other thing you are going to be trading here is continuation setup till you have a reversal again at a point of interest to continue flowing with that particular market here. I'm going to drop a video here. You see it in your screen now, where I show you how to trade continuation setup. So you can just use that idea and continue trading continuation setup. And this is just it. You just want to just see the chart in this way and be able to just flow with it. So let's do some chart work here. So I'm going to be, now if you see, this is BTC on the daily time frame here. What you see on BTC here, if we should scale down, you can see that it's very clear on the daily time frame what BTC is doing. BTC is creating series of low, high, low, high. Now if you see, where did the reversal concept came from? This is where we had that reversal concept here. So this is an all-time high, but we had that reversal concept at this point. Now after the reversal concept here, any other trade we are going to be looking at, we have a trending market from this point, but the market's reversed. Let me better clarify. So all of these points from all of these zones here, you can see the market creating series of highs and lows. So the market was just initially at this point trending to the upside. You can see all the thing the market was doing at this point was trending to the upside, giving us that highs and lows up until when we have a reversal concept. Now after this reversal concept here, any other thing that we're going to be looking or trading in the market here is continuation, because the reversal concept have already happened. So if we miss out on this reversal concept, any other thing we're going to be trading again will be continuation. So that's why you see we have it here. Then we have this low. This is just a week, so I don't mostly count that week. That is just a week here. Then we have, from this point, we have this low, we have this high, we have this low. Then from this point, what do you notice? The market has already given us that reversal concept. So most time we are going to be trading continuation, and continuation here mostly happen like this. So we have this low, we have this low, we have this low. Now once the market gets into, this is a point of interest on a daily time frame. Once the market gets into this point of interest on the daily time frame, this is when you now go to the 15-minute. At this point, once the market tap into this point here, this is when you now go to the 15-minute to look for that reversal concept. We'll come back to that. Then we have this expansion, we have this retracement. I think we have a little pullback here. Then we have this expansion over here. Then immediately the market tap into this point here, this is when you now go back to look for that retracement concept on the lower time frame. This is when you go back to the 15-minute to look for a reversal concept on this place, on this time frame, and ride it all up down again. So now if you see, what do we have again? At this point the market gave us an expansion again all the way down. From this point we have this very big expansion all the way down, and this zone we could consider this zone here as another point of interest in the market more ish. So now once the market gets to this point here, this is when we now go to the lower time frame and look for a reversal concept to continue flowing with the market. Now we don't want to just sell short from this point unless we get a reversal concept. If we don't have a reversal concept, it means we are just going to be flowing with what the market is doing. But if we have a reversal concept, now we'll take the trade all the way down and we'll just keep flowing along with it. So let me go to the 15-minute here. Let's see what BTC is really doing at this point. So if you see, this is the zone I marked out. Let me go to the 45 minutes so that it will be more clearer. So as you can see, the market was initially on an uptrend before it got to that's daily point of interest. So what do you notice here? We have series of highs, lows. The market was just trending to the upside, creating series of highs and lows. Now this is an expansion, this is a retracement. I'm trading this retracement because I already know where I am in the market. As you can see, I start looking for long at this point because I already know where I am in the market. At this point here, if you understand what we had here, the market immediately, the market tapped into this our point here, into this our daily order block or daily point of interest, the daily breaker. Then let me scale down a little bit so that you don't get it very twisted. Let me scale down a little bit. If you understand what we had here, from this point the market was creating series of highs, lows, highs, low. This is a low, this is a high. Then if you understand, we change structure from this point here, we change structure from this point, and the market just keep doing its thing here. So since we already changed structure here, I already understand that okay, we're on a daily point of interest and the market could start selling from here. Since we already have this high, we have this low. Sorry, let me mark this out properly. We have this high here, we have this low, we have this high. The market switch on us from this point and this. So I already understand that the market now could, we have an order block here. We already changed structure, we have an order block at this point here. I already understand that. And the market now, we now have a mini structure. That's why I even took this long. We now have a mini structure here. This structure now is reversing now to a point of interest. You understand, we already changed structure here. You want to really pay attention to all of these things here. Then we now have a structure selling up down. So why I caught this trade is because after this expansion to the upside, we have an unmitigated. If you go down to the 15 minutes, you see all of this clear line here. Then we have this point of interest, then we have this unmitigated and doom, and immediately the price now went up to react from the point of interest in which we have, which is the order block at this point here. You can see that it begins to switch up on structure again. We begin to have that switch on structure. Now this is just telling us that it's like the market is now aligning with the overall structure we have on a daily time frame. So at this point here, I want to be very careful with taking long trade because I already understand where I'm at in the market here. And as you can see now, after the price reacted from that daily OB or that daily point of interest, you can see that all we are having here is just the market giving us series of sales. So I'll be more interested in looking for those sales trade when we have clarification. But now this sell here would be very, I'll be more interested in taking a very sell when we have a double break in market structure. I already talked about double break in market structure here. Once we have a double break in market structure, I'm going to start flowing up with the sell. All of what is happening now are just single breaks. If we have a double break in market structure, I'll be very interested to just continue flowing with this sell and continue trading reversal. This video is already getting longer. I'm going to put a video now. I'm going to put a video in the description of this video or above your screen right now, so that you'll be able to get the concept of how to trade reversal. Once the price gets to your point of interest, you'll be able to get the concept of how to trade continuation, understand reversal, trade continuation, and just flow with the market. So see you on the next video. Make sure to subscribe for more content just like this.